We had really stellar uh, job creation, right? We were expecting 390,000 jobs to be created, and instead 678,000 jobs were created. That's actually really phenomenal. And also, the number from last month was revised higher. So instead of 467, which is what we reported, they came back and they said actually more jobs were created. That employment rate has dropped, which usually gets people kind of happy. This is what I like to look at that is very seldomly reported on. This is the participation rate. So this is telling us that, you know, 62.3% of the population is actually involved in these numbers here. That means almost like what, 37.7% of the people are not in the job force here in the United States. And so I'd like to see this number go up. It didn't go up at all. But that just tells you how many people are bringing themselves back into the job world. I've seen it as strong as 68, 69%. And then you've got like a full on working, um, country. But here's the one that I think is most interesting. And this has to do with the Fed meeting that's coming up in 2 weeks. And that is what we call the monthly average hourly earnings. And so the monthly average hourly earnings, they were expecting it to go up again by 0.5%. It was flat. And so what that tells us is the Fed's meeting in 2 weeks and they're deciding whether it's going to be 25 basis points or 0.25% or 0.5% increase. The 0.5% increase would probably send Wall Street dropping. Jerome Powell's been, saying, hinting pretty strongly at this number. And this number is supported by not having wages going up incredibly. So, this is good news for investors. This takes a little bit more of the uncertainty out of what's going to be happening in March.
Yeah, and I think there's no doubt that the interest rates are going to be increasing. Just a matter of how many times this year and how much. Um,
Exactly.
and that's not necessarily bad for the market. Like we've
No.
been at zero for too long. Inflation's too high. It's a natural process.
Yep.
So that hourly wait, what was it called? The hourly average hourly earnings. Very interesting stat to keep an eye on.
Yeah, you could see for the year it was up 5.1%, which is what was getting people kind of, worried because when you talk about inflation, you're not just talking about the prices at the pump or the prices at the grocery store. It's also the inflation affects how much people are earning. So if you start to see that tempers, in other words, they were expecting the annual inflation to go up to 5.8%. It stayed low, 5.1%. And this month, especially, there was no growth in wages. That might mean that naturally inflation is kind of tempering itself, and the Fed doesn't have to intervene to the great extents that they thought they might have to, or that they were hinting was possible. So the less that the Fed gets involved, and the more that we allow this to happen naturally, then that means more, confidence in what your investments are going to do. Investors don't get as freaked out.